President Xi Jinping of China arrives on September 24th for an important summit meeting with President Obama. Some of the issues they'll be discussing are political, some economic. This is Steve Wiseman at the Peterson Institute for International Economics with Nick Lardy of the Institute to talk about the economic aspects of the visit. First of all, Nick, thanks for joining us. What are the major economic issues likely to come up?
Well, I think there are a range of issues. They might be able to announce some progress or semi-conclusion of a bilateral investment treaty. They've had 2 rounds of negotiations recently, and they made some progress, although the details aren't really available yet. I would not be surprised if President Obama raises with President Xi the whole question about what's the trajectory of Chinese economic growth, the whole question of how reliable are the data, how timely are they, how accurate, and there's been a lot of global reaction in that, based on the assumption that the economy is slowing down quite a bit, and I think he might ask for more clarity on that, as well as the broader issue of how are they doing on the reform agenda that they laid out a couple of years ago at the so-called third plenum. How strong are they going to be on the reform of state-owned enterprises and a range of other issues. And I think he will raise some of the issues that are of specific concern to some sectors in the U.S. economy, particularly technology firms. China's adopted a number of policies recently that would appear to disadvantage American firms in the Chinese marketplace, and I would expect that that would also be a subject for discussion.
That's not a small agenda. Let's talk first about the Chinese economy. The markets and policymakers are worried that the Chinese economy is really going down, is swooning. What's your latest analysis?
Well, I think the problem is we don't get enough high-frequency data for the most important part of the Chinese economy, which is the service sector, which now accounts for half of the total economy. And the Chinese give us very frequent data on the industrial sector, and industrial output has been declining, but it's been declining since 2010 almost continuously. So the real question is whether or not the service sector is growing fast enough to partially offset that. And given the lack of high-frequency comprehensive data on the service sector, it's very hard to make a judgment on that.
Now, American concerns about Chinese manipulation of its currency have been on the agenda for years and years. And there are some people in Congress that are still worried about that, although the administration has not so much raised that recently. How's that going to factor into the discussions?
I think it would be at most a very secondary subject that might be alluded to or discussed in passing. China's basically done what we've been asking them to do for years, so there might be an opportunity for President Obama to give a recognition that they're moving in the right direction in terms of adopting policies that will, over time, lead to a more market-determined exchange rate.
Let me come back to the bilateral investment treaty, or BIT. Tell us, what is it and why is it so important?
Well, it's this would be a treaty, would be approved by the Senate eventually, that would open up large parts of China that have currently, up till now, been off limits or subject to immense restrictions in terms of investment by foreign firms. This is particularly in financial services. They opened up quite a bit in 2001 when they came into the WTO, but the world's moved on a great deal in terms of financial services since then, and there are a lot of restrictions on ownership, whether it's in securities, insurance, asset management. U.S. and other foreign firms can't operate their own businesses there. They have to partner up with Chinese institutions. Telecommunications is another area that's quite closed. So the most important parts of the economy that would be opened up on a very liberal investment treaty would be in the services sector. So financial services, telecommunications services, value-added telecommunications services would be opened up to foreign investment.
The Chinese, of course, are concerned, fairly or not, that in their view, the U.S. is not open to Chinese investment as much as they would like. Has there been progress on that aspect of the discussions?
It's hard to tell, but I think the opportunity for progress is pretty limited because we have a very open investment environment. Very few restrictions. There are some restrictions on airlines and a few other things like that, but they're quite small compared to the restrictions that exist in China. And what the Chinese really object to the most is this Committee on Foreign Investment in the United States, which has to examine many investment transactions, particularly if a state company is involved from the Chinese side. And that's a fairly opaque process that the Chinese still don't really understand very well. And there have been a few well-publicized examples where deals have not been approved. And the Chinese in practice would like to see some revisions in that process. It's very unlikely that that can be accomplished because that whole process was set up by the Congress, and I don't think they're in the mood to make adjustments to deal with Chinese sensitivities.
Let me ask a final question about the atmospherics. With all of the publicity over the last 6 months over the Chinese stock market problems and other aspects of the economy, other signals that some parts of it are slowing down, as you mentioned earlier. There's a lot of talk that somehow President Xi's lost the spring in his step and that he comes to this visit not as confident about China's economic power as he might have been last year. What would be your assessment of that sort of talk?
I think that's probably a correct assessment. I think now that some time has gone by, even within China, they recognize that their attempt to slow down the correction in the stock market was probably a mistake, might have been handled differently. Their change in their exchange rate policy in August might have been more fully, better communicated, created a great deal of uncertainty. So I think there is this impression that for decades, China's had brilliant economic decision-making that has led to a record pace of economic growth. And in the last 6 months or so, they haven't been quite as perfect as they were in the past. So I think it is a different environment, and people are kind of re-examining how strong is the economic decision-making. Are they going to be able to carry on the growth trajectory that they've had? Not the double-digit, but will they be able to sustain what they call the new normal, which is growth of 6 or 7%? A lot of critics are saying they're headed for 2 or 3.
Well, this is a speculative final question, so forgive me. But how much does that do those economic factors filter in to the political discussions, which are also very sensitive?
I think inevitably they're interrelated. But even though China's growing slower than it was a few years ago, it's still probably the fastest growing economy in the world. They're growing at least twice as fast as the United States. So their economic footprint is still expanding in the global context, maybe not quite as fast as in the past. So I don't think the wind has really been completely taken out of their sails.
Okay. Nick, thanks a lot.
Thank you.